You can succeed with your financial goals. You know, you may have heard or read this statement. Money is not the goal. Money is a tool that when used properly and applied properly can help to achieve our goals. And yes, money is a necessity, and just about everybody wants more money. But what if you could make your money do more? That is, if you could get more out of the money that you have and gain, that would be like having or getting more money, right? There are a few things you can do, strategies that really do exactly that. And I'm going to share some things with you in this video that you can start using right away, or at least you can include them in your financial goals going forward. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. For the past several years, I've focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. And when incorporated along with some really effective cash flow principles and sweep strategy, it is truly amazing what you can accomplish with your finances. So let's get right on into it. First, when setting financial goals, as pretty much with any other goals, it's helpful to write them down. For example, if you have the goal of raising your credit score, which is always a good goal, unless, of course, your score is already at 800, you should write that goal down as a main or headline goal. Then write down the stepping stone goals that will result in your achieving that headline goal, such as pay off credit cards, pay off car loans, reduce unnecessary spending, etc. Another worthwhile financial goal is to create passive streams of income. That would be another headline goal. Stepping stones for that one could be save up down payment for rental property. Actually, that one is also more of a headline goal as well and should have some stepping stone goals with it. Perhaps something like buy one less coffee drink per day and put that $5 into down payment savings. That'll grow that down payment account by $100 a month. And a few other things that you can cut back on and instead put that money into your down payment account, and that account will grow faster than you ever thought it would. We're talking about basic cash flow management here so far, and it is important to write these goals and steps down. That way you can look at them daily to remind yourself what your goals are and your plan to accomplish them. It gives you positive reinforcement for the actions that you have committed to in order to achieve the goals. So if it feels like a sacrifice to not buy that one coffee drink or to pass on spending money on some unnecessary thing and put that money into savings instead, reviewing your financial goals daily will remind you of the really good reward you will get when you achieve the goals that you're making these changes for. Now let's talk about how to create more positive cash flow, which will free up money for you to use more productively in pursuing your financial goals. If you don't have an infinite banking tax-free cash growth warehouse account, now you really should get one started as soon as possible. Because with the money in that account, you can actually make your money work twice as hard for you, unlike any other strategy or account. Now, if you're simply financially stretched to the point you just can't make premium deposits to a tax-free cash growth warehouse account, then you should open up a personal line of credit or a home equity line of credit, PLOC or HELOC, respectively. The reason is because those lines of credit offer very low revolving interest loans that you can use to pay off higher interest loans. And when you do that, you transfer those higher interest loans to the low interest line of credit and save the difference in the interest, which does add up quite quickly. And just by doing that simple strategy, you will improve your credit score and free up a little money that you can put towards something else, such as paying down another loan faster. Or once a couple of those other loans are paid off, you can then start your tax-free cash growth warehouse account. Now, here's a tip for increasing your credit score. When you pay off a credit card, don't close the account. Just put the card away in a secure place and don't use it anymore. That makes the entire credit line of that card available and reduces your overall percentage of credit usage. You see, the lower percentage of your total credit used increases your credit score. So a simple tip to help your credit score is to just call the credit card companies and ask for an increase in your credit line. Even if they don't give you an increase, it doesn't hurt to ask. And if they do increase your credit line, that'll automatically lower your credit usage and improve your credit score. Just don't go charging up the balance. This moving of credit balance from a higher interest loan to a lower revolving interest loan is at the heart of the sweep strategy. The other part of the sweep strategy is how you can keep the total interest charged on the line of credit to a bare minimum. Because you're able to take loans from the line of credit at will, and they actually come with checks to make it super easy to do that. The way to keep the interest to the minimum is to deposit your entire paycheck as a payment on the line of credit each time you get paid. Then, as you need money to pay bills or buy necessities, you simply transfer the needed amount from the line of credit to your checking account and pay them. Meantime, each time you deposit your paycheck as a payment on the line of credit, the amount of interest charged on the balance is lower. Now, imagine how much better it is to use your own tax-free cash growth warehouse account as your personal line of credit. Instead of a bank or credit union, and by the way, we recommend credit unions over banks as they generally charge less interest to members than banks do. Using your own tax-free cash growth warehouse account not only gives you really low interest loans with much more flexibility than banks or credit unions, but it pays you high compounding interest on all the money in your account, even when you have it leveraged with loans. And with the best providers of these accounts, the interest they pay to your account will always be higher than the interest they charge for the loans. So you always come out ahead in earnings. It is especially important to take advantage of wise wealth strategies in the current high inflation and recessionary economy. By incorporating cash flow principles, you can create more positive cash flow. And by utilizing the infinite banking tax-free cash growth warehouse strategy, you can actually double the power of your money. Of course, in this video, due to time constraints, I've only just given some basic previews of the most valuable finance strategies. We have a series on-demand video classes available on request right here on this channel in our financial literacy playlist. Each of the 3 classes are about a half hour. One goes into more depth on cash flow principles, one is all about the sweep strategy, and one is on safe money practices and retirement planning. Of course, our 60-minute webinar on becoming master of your financial world may be viewed at the link provided below this video in the description box. Now, if you found this to be helpful, please like this video and subscribe to the channel. Also, please post your questions and comments here. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. If you'd like to book a free consultation with me, the link to my Calendly page is also below. And if you'd like to apply to become a client of ours, the link to the application is also below. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.